All right, here we go. What's up, everyone, and welcome to the 5ers Live Trading Room. We have a empty spot to the right of me. That's because Alex is probably going to come up here soon. We're going to see if we can change to that one. No, this does not work. That's better. Let's go with that one. How are you guys doing today? Hope you guys had a wonderful weekend and you're making a ton of money this Monday. How are you doing, Victor?
Hi, everyone. Welcome to our next episode of our show. How are you doing, Jonathan? How was your weekend?
Oh, my weekend was fantastic. I went up to Stockholm, the capital of the country I live in, which is Sweden. For those of you who do not know, I celebrated my brother's birthday, surprised him. Haven't met him in a few years, so I had a nice little surprise birthday celebration.
Very nice.
Rented a nice house, had like a really luxurious place, had pool and everything. So I was actually trading from the pool. Like I'm really, stepping it up here, becoming that trader influencer that I always wanted to be. Next up, I need a boat. I need a big boat. Alex, how you doing?
I'm doing fine. I'm doing very well. Should I put some music on?
Do that. You said that like you just had a stop loss getting hits. Like, yeah.
No, I haven't. I had the trade this morning, the one that I sent in our VIP Telegram group that nobody's allowed in. That's the only trade. That's the only trade that I took. And to be honest, I'm just waiting to see what is happening now because it was just decent trade. Be careful.
I just closed a short on NCD CAD here. Made a quick profit on that one. This I want to say this morning because it does feel like it's morning, but it's far from morning.
Should we talk about what we're looking at the market, each one of us, and we'll talk about some of the trades that we had, and then we'll get in just to see what opportunities we've got.
Yeah, maybe you can start because I see that you have your screen.
You've got also your trading plan that you're going to be going through, how to build a trading plan correct. It's very, very, very important.
So yeah, exactly. We can take a quick look at what we're looking at this Monday, and we'll take a look at the trading plan.
I can't remember this trade, but that is just ridiculous. Like I must have took eight pips and it moved up like. That's a lot. I missed out on that, big boy. But okay, so the market opened up this morning. Obviously, let's go on to the daily. We've had everything is looking like an absolute Christmas tree, but we're still, in this overall macro range. Again, we're pushing up, obviously, from the last couple of weeks. And when we came into the office this morning, I noticed this gap in euro dollar. It's funny because we had the same kind of trade last week on this gap. So the trade that we had on this gap was this gap?
That comment though, that comment is fantastic. Why does Superman hate trading Bitcoin after 7 p.m? Because it's kryptonite.
Wow, that is a super dad joke. That is super dad. God, we should give this guy an account for how much of a dad joke that was. But no, we've been having quite a lot of trades over these gaps in the market on EU. So we had a push up, we had price coming down, again push up, and we took a trade. The trade that I took was here back onto the weekly close, the last week's close, and that was the trade we took. And then the same thing is what we have done today. So we had the weekly close just at the top here. We had a gap down, consolidation. And when I came into the office, I was actually looking at these two areas. So I marked off these two areas, which was one was like that, and then one which was that area there. And what I was looking for was that price was just around this level, and I was thinking, okay, maybe if we have you're going to kill me for saying stuff like this. It's absolutely disgraceful. But liquidity underneath these areas. So we got liquidity coming underneath these areas, and I thought that price would come down to it. So I did try and take a scalp, just for a really small scalp, just to come into this area and then go long. The scalp actually got... What is that noise? Victor, God, what have you been eating?
Lots of chili.
Yeah. Let's see if we can get it on.
We are so mature here.
We are super mature, but we're traders, so it's okay.
Yeah.
So this is where we're at. So I tried to get the scalp. This was the scalp. So I actually went short thinking it was going to come down here. I actually got taken out. And then once I actually saw price was going to come down, that's when I actually got long instead. So price took out this area here. I noticed a lot of divergence as well on the stochastics RSI on the 5-minute. And that's when I decided to get long. So if you have a look here, you've got divergence on the stochastics. You've also, let's say, if we put a trend line from this area, you've got a little bit of divergences in these areas. Just getting to the point. And the plan was just taking it up to the last week's close, the close on Friday. And then it just hit that within about an hour. So that was the trade. And I haven't done anything. Fernando, you've been giving credits as well. So check out your account. You've got 100 hub credits there. So nice. You can buy a bootcamp account. Thanks for all your patience with the migration, guys. But yeah, that was the trade. Anyway,
I'm gonna start a question. I'm gonna see if.
Then we should go short here as well, though.
I'm gonna do a poll. I'm gonna ask you guys watching if you want music or not.
Definitely.
Because we are doing this for you guys, the viewers, so we will make sure that you actually are getting get to choose if we're gonna have any music or not in the background, which I think is quite nice. Yeah, we got news coming up. We got news in about 23 minutes. That's I believe US made the news. Not sure exactly what that is. Maybe
manufacturing index. Yeah,
yes,
it's
okay.
Manufacturing. So it's an indication of productivity. So the higher, the better for the dollar strength.
I wouldn't be surprised if this is going to be bullish for the dollar. To be honest, I've had such a push up on everything against the dollar. The dollar's already low on the day, so I wouldn't be surprised if this is just a catalyst that should move everything the opposite direction. And if it is, then we probably can get in some nice shorts, because euro dollar's already doing this kind of like rounded kind of price action, and we've already, could we say that's broken? Probably not broken just yet. If we have a look on the 15-minute, it is at support. So you've got the EMA and you've got a weekly open. So it is at support, but let's see what happens. What are you guys looking at?
Let me share my screen and I'll take a look. So I did my weekly trade planning as always. I took a trade this morning on NCD CAD. So let me show you what this was based on. So I looked at we had that 4-hour candle just closed right there, and I looked at a move, and we had a rejection of this level right here. So first a rejection here, and then one here, and I thought, got one bearish candle right here, a bullish one, and that 4-hour bearish candle is telling me that there's definitely selling pressure here. So I'm watching this as sort of a range, and I'm thinking, price gonna push down lower. I added the fib of this move and saw that down here you had the middle of that reload zone. So basically it's anticipated that this 4-hour bearish engulfing candle indicated selling pressure and price were going lower. So I entered, and then right when we hit that 0.618 is when I closed the trade. Just a small, can almost call it like a, not a scalp, but definitely just a quick in and out, just a quick day trade. Very wide stop loss because I wanted to make sure that if price just started shooting straight up after the close of that candle, I would just close the trade if it wasn't going in my direction, because I've seen that most of the good trades, they immediately start going in the right direction. So if I enter a trade and it just doesn't stop moving, it's like going in the reverse direction. A lot of times I see that it's just better to close the trade, and by having a wide stop loss, that means that those losers will be very very small. And then really all I'm watching is I got five interesting pairs right here. And also what I've done this weekend is I've added alerts on every single pair that I find interesting. I've added alerts at the level of interest. So I don't really have to look at the markets unless there's an alert going off. So I spent an hour yesterday going through the market, adding alerts, and that's all the analysis that I'm going to be doing this week. And I've already done the whole week's analysis. So now it's time for me to focus on my mental edge, right? Not the technical edge, because that was done yesterday. So I got nice. GBP NCD. This is a simple break and retest right here. We can look at the daily. You can see that GBP NCD broke out quite significantly here. We have a very strong level here, also visible on the weekly here. Not that one got removed, but it's a weekly level as well. And we have a breakout. Now I would say that the breakout is confirmed on the close of this daily candle. So ideally, we have a retest of this level yesterday. So I would love to see a move up to that level. Rejection. I go long here for a possible move up to that high again. So the trade, that would also align with the reload zone. So if we add the reload zone here for the fibs, so that would be the reload zone. My entry would be here, stop loss below the level, and then at the highs. And I would probably also look at having my stop loss, because remember last live stream we talked about stop loss placement. And if this is, so the first good stop loss level is below the reload zone, okay? And then what I do is I increase it some more. And then I zoom out and I look at what's the widest stop loss that I can use without completely destroying my risk to reward. And I would look at that one right there, because that's also the low of the daily candle that formed before the breakout. So this is the breakout move right here. So if I'm putting my stop loss below the low of the breakout move, I'm in a very good position on this trade. And it's also a 0.8 R trade, which is above half an hour like I want to. So that's my plan for GBP and CD. Now, if it starts moving lower today, I might still take the trade, but we do have news coming up in inflation rate in 2 days for the pound. So I have to make sure that I enter this trade today or early tomorrow to make sure I give it enough room to move to TP before the news event. And then we got CAD JPY. This is a high time frame trade, right? This is the daily right here. I've added the fib. I see that we have the reload zone down here, but we also have the 50% in a very good position right here. So what I'm looking for here is some sort of bullish reaction right here. What I'm seeing right now is I'm seeing a low, a high, lower low, and potentially a lower high, which is obviously a bearish structure. But what I'm looking at is a break above the 50, create that lower high, and then I want to see a lower low. I mean a higher low. So the higher low, that's going to be my entry. Then I'm just going to TP at that FTA right here on the daily. So that's just and also a very wide stop loss all the way below the level, all the way below the reload zone right here. And then we got Euro NCD. So my first initial plan for the weekend was to short this because we were at the range EQ, major resistance right here. What we're seeing right now is a breakout. So at the close of this daily candle, we will have a confirmed breakout, which leads me to believe that I will be looking at a potential long, and I'm looking at this trend with a low, a high, higher low, then just a sequence of higher highs and higher lows. So I will be looking at something like this. Best case scenario is we have the reload zone right here. Daily candle is going to be closing. After the daily candle closes, we'll have a retest of that level for a move up to that high. And this will be the trade here as well. Wide stop loss, but still a 1 hour trade. If this one fails, I will be looking to short this. And the short is going to look like this, where we fail to form a bullish structure and we instead create a bearish structure. And this would then be the short up to that level. So that's the plan for Euro NCD. And now that I have this all mapped out, I can start adding alerts. So I'll add one alert here and then one alert below here. Now I get an alert on NCD-CAD that TP was hit on this one. So I did exit this one a little bit too early, but still a good trade. But TP would have been hit right here. So I got two more setups to cover. The first one, or not the first one. The fourth one is Ethereum. So if you look at Ethereum right here, in 3 hours and 40 minutes, we'll have the 4-hour candle closing. And if this can close below that candle right there, it confirms a confirmation of entry for me. So I would enter right here. I would look to TP probably somewhere around that area. And I would look for possibly a 1R on this one. That's my short setup on Ethereum, and I have alerts set for this one as well. One above price and one below to make sure that whatever happens, I'm gonna get alerted. And when I do get alerted, I'll make a new plan. This way I don't have to like actively do any technical analysis. I instead can focus on my mental edge, like I said. And then GBP CHF, this is based on the dailies, is probably not gonna turn out or activate today, probably in the next couple of days, maybe after the news event. But this is a very obvious trade here. Come down, test that support, and then trade it higher. And then all of these pairs right here is the pairs that they're interesting, and you can see here it says scanned interesting, and this one says scanned priority, and then below I have scanned no interest. So I've changed the names a little bit of the process here. But obviously these ones, no interest. I'm not going to be watching these at all this week. These ones, I'll be just relying on my alerts. And then the ones that are priority, these are the ones I'm going to be checking daily because those have trades. And also I have the rule that I've set of only taking one trade per day means that I've already taken one trade now. So I'm not allowed to take another trade today. So if this trade activates, I'm not going to take it, which I know that from a trading perspective, it might not be the best thing to do. But from a psychological perspective, it's important that I get used to taking fewer trades. And then when I get used to that, I can start, expanding that to 2 trades a day. All right.
I think
that's it.
I think when you take one trade, when you limit yourself to take one trade only, it frees up a lot of head space, right? Because once you have that signal, you've done your job, and you can do something else productive. You don't have to be watching the screen necessarily. You can do back testing, you can do some optimizing of your strategy. But in any case, not execution anymore, because you did what you had to do for today. And I think there's value to that, because it will increase probably your execution, because you only have one thing to do, which is one trade each day. And you make sure it's easier to just make sure that one trade is done to the best of your ability, executed to perfection if possible. And that is, I think there's a lot of value in that. And you expand that as you see that you're able to handle more, but from a place of strength, right? You're doing it when you're having good execution. And you can, if you do that that way, you can, come back to the place where you had perfect execution. Let's say you went to 2 and you see, oh, I'm not executing anymore as sharply as before. Then I know where my limit is. My limit is just 1, because if I go to 2, I lose that perfection in execution. But that may not be at number 2. That may be at number 5. That doesn't matter. But from going from strength, starting from strength, you will be able to find what is your limit, how many trades are you able to take within execution still being optimal or perfect. If perfect is a big word, but we need to be aiming for perfect execution as much as we can. So I think it may not sound as sexy, right? Because there's a lot of opportunities out there. But it is actually, I think, better to do that. To do less but better. You do less trades, but you trade them better. You have better execution. I think that's a very good thing to be doing, Jonathan.
Here's another thing I wanted to show you guys. You guys remember we've talked about gold here for a while. We've covered different trades on gold, but one an analysis that I'm sure a lot of you remember is we've talked about gold being in this range, and interestingly enough, when price were trading down here, we talked about how we might see a push from range low to range EQ, and that's what we got, right? And then we also talked about how if we break above the range EQ, we're probably going towards the range high, which is this TP right here. Now, and that analysis is very simple. You can look at gold and you can say, well, when it's hitting support, it's probably going to bounce, and that's exactly what it did. It bounced from support up to resistance, and then it broke resistance, and it continued higher to the next resistance, right? But in the span of this, doing this analysis, I probably took 5 trades on gold, and I over the course of those 5 trades, I don't think I was profitable actually. But if I would just have followed my initial idea of just buying gold here and selling gold here, I would have been very, very profitable. So this is also one thing, exactly like Russell was saying here, less is more. I think less is more, and really keeping it simple is super, super important. So what happened here, right? You have 2, at least for me, I have 2 different types of edges, right? I have the technical edge, which is simplicity, and that's what this is all about. Buying support, selling resistance, very, very simple. But then you have the mental edge, and that's something different. That's when you go into the realm of trading psychology. And that is the reason, mental errors are the reason for me taking 5 trades here instead of just 1 simple trade. So most of you watching here, you might think that more analysis is the answer to becoming consistently profitable, doing more analysis. But it's actually more about doing less analysis and more working on yourself, working on your trading psychology. That's I think
because I just had I had a little bit of lapse in my own psychology right now, because I actually was short euro, and I was like, no, even though the structure looks kind of like it wants to come down to the 200 EMA on the 15-minute, I was like, you know what, I'm just going to close it off, just because I don't want to be into a trade while I'm in news. And it did, it's still pushing down, so I just took just got break even right there instead of just holding it. But sometimes you got to know when you want to fight your battles, and 5 minutes, how much would I have got out of it? Well, I probably would have got $400, but
guys, I think I want to talk about trade planning. Can Victor, maybe if Victor, do you have anything like a trade that you think is you want to enter anything like right now? Otherwise, we can perhaps wait until after the. Okay, Victor is.
Do you want to do it after? Do you want to do it after the news? Because we got 5 minutes, and then you're gonna have to cut and stop and then start again.
I can show you the trade.
Right, we'll
I have a trade open, and I can show you the idea behind it. let me do that. I'll put on my screen, and I will. What I have is this gap. I will make this only visible for the lower time frame, so it doesn't show in any higher time frames. What I have is this gap left an order block, which is kind of advanced way of looking. It's a variation of the basic rules for the order blocks, but this order block, this gap left an order block, and price came right into it, and that gives me an entry, an area where I need to be looking for a transition, right? A reversal pattern. And if I go to the lower time frames, I find that reversal pattern right here, where this is the head, right? And this being on the 5 minute, actually it is here. This is more the neckline is here. That was broken, and that makes this this comes back into this area. That is my selling area, and that's a trade I'm currently in. I'm not showing exactly where I got in, but it is as price was getting interacting with that entry order block, and I'm in that trade. The thing is, it's been on the higher time frames, on the hourlies, it's been so bullish, and it's only been forming bullish order block until this one that made me take the trade. But it's been very, very bullish, forming outside bars all the time. This is an H4 outside bar, and this as well. That speaks to the strength, the bullishness of EU. So I don't think this is going to go much further down, but I will keep it open through the news. I have calculated the risk reward, and I've taken into account a bigger, in this case, my stop is quite large in comparison to normally. It's about more than 10 pips. That is unusual for me, but that allows me to hold it through the news. The distance to my stop is currently about almost 20 pips, right? So it's a risk that I can handle because I calculated that it's okay. But normally I would be, if I have my tight entry and the price is very near to my entry, I will probably need to close this down. So that is the trade. My initial FTA is right this at the next FTA is the bullish order block on the H4, but I can see this actually going and taking this low out, and I would like to see how it behaves after doing that. Does it switch back and transition back into bullishness? Then I want to be out. But if it just falls out of the sky like a brick, I don't want to be closing this, because we are, it could be the first reversal pattern that will be coming, and price might be needing to go much lower. Perhaps even this order block will not be enough to hold it, and will go to the next one. And I want to be part of that movement. But so I'm going to be holding it for the news as it is coming out. That's what I have with EU, and I have a buy signal on GU, but I haven't taken it. Not a buy signal, a buy setup, but I haven't had any signals yet. It's price coming back into that H4 order block. Let me open it up just to make it more visible. But this area where that line is put, the H1 line, this is the area that I'm going to be looking. These are not valid entry order blocks, although I have them formed there. The price needs to interact with this order block first before I can take them. But so I'm keen on looking how price reacts to these structures, and that's what I have. Typically, I don't have trades that are long on GU and short on EU, but I just follow whatever signal I get, even if it seems to be conflicting. Sometimes it does not necessarily need to be that case that it's conflicting, but I just follow the signals, and it should take care of the results in the end. I don't have to second guess which one is going to be right. I just take, even if one is going to be wrong, I lose 1 or 2 R on one side, and I win hopefully a multiple of what I lost on the other side, since I trade a higher risk reward profile. So it's okay for me. Yeah, those are the 2 setups that I have, and news is coming out, or already came out actually, right?
Didn't really do
With
anything.
no reaction. No, I didn't do anything.
No reaction at all.
No reaction. It was this candle, which was a non-event.
Pretty much.
Yep.
I've got back into my short. Because I think it's going to come down. So on EU. Oh, you're already in EU, Vic.
I am. Yes, I am.
Oh, nice. Perfect. On the 1 minute. Oh,
Yeah,
lovely stuff. Yeah, so I've literally just got back in right now. So where are your take profits?
My stop? Oh, my first TP, which I don't have it put on the system. No, I don't. My mental TP would be the FTA, which is this structure. If you go to the EH4,
price? Okay,
that would be this upper border, which is 0893, 93.7, and something adjusted a few pips above that. So that will be 94, 5, 6, something like that. That's my that's my FTA. But I'm keen, because if this is the first reversal that we'll be seeing, right? It could be the very top. We don't know that. You never know when the top is going to come. But it could be a temporary top. So if that is the case, I may have gotten the very best entry, the first transition reversal pattern. And so I want to be keen to see how it reacts with the first order block, which is this, of course. And what I'm specifically what I want to be seeing is how does it handle, because we do have structures on the other side, right? This is a area that I want to be going long from, right? Because it is a demand area based on the order blocks, on the bullish order blocks we have below us. So if it doesn't react to them, that's a sign of weakness, because it's supposed to react to them. And if it does that for all of them, I would be having like a head start information that it's probably not going to respect that low as well. And that's information I can use for my TP. If I have any indication that it's going to go much lower, then I wanna have some I want to have that opportunity to put it lower. But of course, if I see rejection from the first one, then I would at least close half, and if not all of it. That's my FTA where I got it circled right now. And if it breaks this, and there's no reversal pattern as it comes into these structures, what I would do is I'll just put my TP on the before the next structure, which is this H4 below us, which is at 0871. And if we look at the ATR of today, that's exactly the 100% ATR on EU. So it makes perfect sense in terms of range for it to reach these kind of lows. So that would be.
I think that's a really good setup right there. I like the you showed the the breakup structure there on the lower time frame on the 5 minute. This looks very good.
Yep,
it's
I like it
to the gap, to the support, and also it looks like it's also where price gapped down to as well. So yeah, it's a good support right there. I like that.
Yeah.
We got just a reminder to everyone, Powell is speaking tonight as well. So if you're trading tonight, make sure that you're not trading through that Powell speech. Usually you'll see that some of his speeches are having quite a dramatic effect on the market.
Yeah, there's something else I want to show. A lot of times I have these horizontal yellow lines indicating where I'm interested to be buying, right? and it is this area that I was in advance interested in selling in this case. And as you can see, it doesn't mean that I'm going to be selling that area blindly just because it reached it. It needs to form that reversal pattern on the lower time frames, and that's my confirmation. It needs to, align with the idea that I have on the hourly. Only then I am allowed to enter my position. So that's something that I only show the area, but there's more to it. It's not that just that area, and I when it gets there, that's the reason why I can't put a limit order there, because I need to read price action as it confirms me that it is indeed transitioning to the bearish order flow on the lower time frames as well. And this is a structure almost four. No, go ahead. This is only about a little less than 4.124 in terms of risk to reward. That's if it goes on. Go ahead. That's it for me.
Yeah, that's I like that. I think the structure in that one is very clean, clear. The levels aligns nicely with what I would be looking at on the lower time frames as well. It seems that your TP also looks like the reload zone as well. So there's a lot of confidence down at that area. It's a good support, lots of good fib levels down there. Yeah, it's a good, and then it's also where you have had the gap come down and trade around that area as well. So it looks quite likely that it's going to move down there. Okay, so
we'll see.
Let's talk about trading plans. I think when you're starting out in trading, I think it's super important to have a plan, okay? A structure. You need to have a document, and at least this is what I did, and when I really started taking trading seriously, and when I understood that it's not as easy as just, it's not easy. You need to trade, treat your trading as you would treat your own business. So if you're going to start a business, you obviously need, you want to have a business plan, right? You want to imagine that you're going to the bank and you're asking for a loan. Now the bank is not going to give you a loan if you say, "Oh, I'm just gonna buy euro, whenever it hits support, and give me money for that." Like you need a proper plan. You need a document where it outlines everything about your trading. What type of trader are you going to be, what type of risk management are you going to be using, what pairs you're going to be trading, what market are you going to be trading, what setup are you going to be trading, and you want to know the exact details of that setup, like everything. So I have put together a document that I'm going to share with you guys, where I've outlined some of the most important things that I think you can look at when creating a trading plan, at least to start out with. So what I recommend you do is just create a document, right? You can do use a Google Doc or whatever, right? Just outline your overall trading approach. So here you can see that I have, it says trading plan for Forex and Bitcoin and Ethereum. And then one good thing to do is to answer the question, who am I as a trader? Try to put it into words, put it into writing. Like, what type of trader do you want to be, or what type of trader are you? And maybe, if you want to try different trading styles, put it all in here and try to have a document where you can, if you feel like it's all messy and you're not really sure what's going on, you can go back to this document, that this will be your go-to place for everything you need in your trading journey. So here it says, who am I as a trader? It says personal trading style and routines. It says I'm a trend trader that moves slowly, and I will focus on the weekly, daily, and 4-hour charts. I will use a trading system based on the break and retest concept. Because honestly, if you can't describe who you are as a trader, you're never going to be able to trade consistently. Like if you don't even know what type of trading style you're going to be using or how you're trading, it's going to be very difficult for you to consistently do the same thing over and over again, like you have to if you're going to be a consistent trader. So here I have some ideas on what I'm going to trade. It says I'm going to be trading the Forex major miners and the crosses between them, as well as Bitcoin and Ethereum. I'm also writing that I will plan all my trades on the weekend. And because I'm a 100% TA trader, I need to know if there's any major news event on the day that I plan to trade. Simple stuff, right? And then what I try to do as well is I use sort of a psychological profile. So I try to think about my strength as a trader, and I also try to think about my weaknesses as a trader. And then I try to come up with problems and solutions, right, by leveraging the weaknesses and leveraging the strength, right? So here it says, I'm a strong technical analysis. I can quickly identify major support and resistance levels, trends, and market structure, and all of that. I also write that the reload zone is a strength. It's a unique system where I trade based on the lower time frame market structure around the 0.618 fib. And also passion, I really love what I'm doing here, and that's one of my strengths, right? That I'm kind of like obsessed with trading, and also I'm good at accepting loss, and I can cope with losses much better than now than I compared to when I started trading. And I'm fairly patient. I'm patient when I follow the rules that I've set up. I'm quite patient. Yes, I can share this. This document with you guys. I'll see how's that possible. Maybe if you, I can probably do that through the Discord somehow. So if you, not sure if Discord is not open now, is it, Alex? We closed it temporarily. Okay, so because of we've had a huge influx of new members, so we had to temporarily just close the Discord. We're opening it up soon again.
Closing means just obviously closing to new people.
Yeah. So weaknesses, right? This is very important. The strength, that's one thing, right? But your weaknesses, that's super, super important, because that's where all the mental errors come from. All the small things that you're doing in your trading that it starts adding up, and this is the really important stuff. So what I've written here is I'm impulsive. I can be quite impulsive, and also quite busy lifestyle. So I need to make sure that my process is focused on the higher time frames, and I need to use tools and alerts, etc., to automate my trading, to limit my screen time as much as possible. And then one of the worst weakness here is overtrading. Overtrading combined with impulsiveness is very dangerous, and I need clear rules to combat this. So now you've written down your weaknesses. Now you gotta try to find solutions to these problems, because these will be much more important than your technical analysis. Okay, so here I've said most of the problems above are easily solved by carefully planning my trades and being disciplined.
I've sent you another case. Shit.
Another case? Yeah, okay. He not for us.
I gotta start like turning this mic off. Sorry, guys.
Okay, so the plan should be done on weekends based on high time frame analysis. Now, and then overtrading. And here is something that I've talked about, right? Overtrading. I will counter this by setting a 2 trades per day limit and make sure never to enter anything that's not in the trading plan for the weekends again. If I follow this, overtrading should be did I swear?
No, you didn't.
No, apologies.
Alex,
sometimes we have those
did.
little slip ups.
Okay,
apologies if you got kids and stuff watching or in the background.
Putting a dollar in the jar.
In the jar.
The jar. Yeah, so very important, right? We've analyzed the weaknesses, from a psychological point of view, and come to the conclusion that most of the problems can be solved by having a max number of trades per day and planning my trades on the weekends based on higher time frames. And then also, it says right here, I will utilize TradingView's alert system to make sure I don't have to check the chart until price hits an important level. Every good idea that you come up with, you add it in here, and then you can like go back and you can look at it and say, you know what, this is what I need to be focused on, because sometimes you'll forget about the important things, the small things that adds up and becomes huge. And then I have trading rules, okay? And these are the trading rules that I, follow, I guess, should follow. 1% risk per trade. Only trade the plans. If no plan, no trade. Never trade when there are major news events. Never have more than 2% risk in the market at any given time. Never have more than 2 active positions open at any given time. Never trade against the high time frame trend, and the high time frame trend is the daily. If you see higher highs and higher lows on the daily, you only look for longs, never shorts. Maximum 2 trades per day, and maximum monthly loss is 5%. After you lose 5%, you stop trading for the whole month. And always take a 24-hour break after a big winner or a big loser. And then I have additional notes and thoughts, and here you can write anything that's not in the template, right? And what I've written here is, my mental edge is more important than my technical edge. So read Trading in the Zone every day and practice probabilistic thinking. Your trading should be effortlessly. And Trading in the Zone, it's this book right here. I have it next to me when I'm trading. And there's a few chapters in here, and there's a few lines in this book that almost instantly, most of the time, takes me back to what I need to be focused on. So if you haven't read this book, you need to get it right away. And I have bookmarked a couple of really good lines in this book. So when I'm not really feeling in the zone, I read this because it instantly takes me into the right state of mind. Like he talks a lot about what I've talked about earlier as well. More analysis is not going to help you to become consistently profitable. It's most likely the other way around. The more analysis you do, the more likely is you're going to hit that analysis paralysis, and that's going to take you out of the flow state of mind. And like I said, read it every day and practice probabilistic thinking. Now, to think in terms of probabilities is it's something we all understand what that is, but it's very, very difficult to actually do. When you're opening up the charts and you see a trade and you say, all right, I'm accepting the risk of this trade because I know that I'm risking 1%. And when the stop loss gets hit, I'll lose 1%. But are you really accepting what that means? That basically, what it means to be thinking in terms of probabilistic or probabilities is that when you see a trade pop up, you see your edge activate. There is a completely, the outcome of that trade is completely random, completely 100% random, that individual trade. Even though you have your edge visible and you know that you have a 60% win rate of that edge, the individual trade is completely random. You can lose that trade or you can win that trade. It's like flipping a coin. It consistently comes over a large number of trades. So after hundreds of trades, you'll start to see your edge being visible. On the individual trade, you have to just take that trade and not think about it, not let the emotions like fear and greed affect that individual trade, because that will take the edge out of the setup. It's very, very important that you have things in the trading plan that will help you think in terms of probabilities. And for me, that is reading at least 2 or 3 pages from this book every day. It's very, very powerful, because if I start by reading about how to think in probabilities, it's going to be much easier for me not to overtrade. And I've tracked this in my journal. The trades where I prepare. So my pre-trade routine is I'm supposed to meditate for at least 5 minutes before I even turn on the PC. And I need to read like a couple of quotes from that book before I start trading. And I've tracked this in the journal. The trades where I do are obviously much more profitable, which is weird because it has nothing to do with the trades. It has nothing to do with technical analysis, but it's just a good example of why it's so important. And then after this, I have risk management. And here you just write what's your overall risk management strategy. I know Victor's page here would probably be huge, but I only have like three lines here. It's just risk 1% per trade, TP at half an hour or higher, wherever the FTA is. Only trade when in the zone. And this is something I call mental risk management, because for me, it's much more important for me to manage my risk by managing my emotions, because I know that I'm not going to lose more than 1% on a trade. But if I trade when stressed, I'm risking much more than just 1% per trade. I'm risking of destroying my edge completely. So mental risk management is very important for me. That's also why I have this rule on the risk management to take a 24-hour break after a big loss or a big win. And then that's before we get to the technical analysis. Okay, so all of this is before you even start thinking about technical analysis, because this is what you have to figure out before you look at the charts. Okay, and now we go to the setups and examples, and here we have a setup called the trending break and retest. And here you write, what is this setup about? And all the details of the setup. So here, for example, the trending break and retest, this is something I'm not trading today, but it's basically you add the 20, the 50, and the 100 EMA. They all have to be nicely fanned out, and there needs to be a break and retest of our horizontal level and confluent with the 20 EMA, and then you look for a bullish engulfing or a bullish pin bar. I wish I could make the images bigger here, but the point of this presentation is not to give you a trading system, it's to show you what your trading plan should have in it. And at the very end, because it's of last importance, if the actual trading system. Okay, so a lot of people, they will start by doing this the other way around. They'll find a system and they'll make a trading plan out of that system. But this is my trading plan, and then they'll have like when price does this and this and this, I'll do this. That's the trading plan. But the actual technical analysis and the actual trading system that you're going to be looking at every day is a very, very small part of your trading. What's more important in your trading plan is to understand who you are and understand what type of personality do you have, and what type of trading style fits with that personality, and how are you functioning from a mental point of view. Are you even able to think in terms of probabilities? And if you can't do that, then you will never be able to be a profitable trader. So you have to figure that out first, and you have to make rules around that. So for example, again, one of my biggest problem in trading is overtrading. I'd say that not only my biggest problem, it's probably your biggest problem as well. So how do you deal with that? Are you going to do more technical analysis, or are you going to be finding a profitable system? Obviously not, because if you have to make rules around that. Okay, so if you're overtrading, trade less. How are we going to trade less? That's for you to figure out, and that's why you need a trading plan. And in this trading plan, you can have different setups. You can have different trading systems. And if you see a setup and you're like, I don't think this is a great setup, you go back to your trading plan, you follow the checklist of that setup, and if it doesn't align with your trading plan, you don't take the trade. It's that simple. To become consistent, you need to... So one thing that Mark Douglas talks about in the Trading in the Zone, he says, The consistency you seek is not in the markets. It's in your mind. Consistency is a mindset. Okay, you need to be consistent in everything you do, and not only in the trading system. Okay, you need to be consistent in the way you're thinking, in the way you're applying this logic to the charts. This is why a trading plan should be more about trading psychology and not the actual trading setups. Okay. I need to take a quick break, and maybe we can round up some questions, and then I'll be back in just a minute. Okay.
We'll just talk about these trades because I know Victor and I are both in the exact same trade. Victor's up here. He's actually super chilling right now. He's relaxing. I got into a late trade. I was looking to get into here, but because of the news, I decided to get out. So I did get into a late trade here. Now, it still has broken the EMAs. So at least coming down and hitting this 200 EMA would be something that I would be looking at. So we broke the EMAs. We look like we're just, retesting up into this area. The area is obviously the 50 fib and the 618. So let's see what happens when we get to this area. If it starts showing up big volumes now that it's pushing up and showing strength, then probably my stop loss is probably going to get hit, and then we may see another push down. I don't think that's going to happen. I do think we will probably hit up into this area here and then start drifting away. But let's see what's happening. We do have a little bit of momentum. So momentum on the short time frame is up, but it's quite lagging at the moment on a longer time frame. If we go on to the 15 minutes, we're still going down. The momentum is dying on the 15 minute to the downside. So I think we're in a good position, to be honest, Victor. We just got to wait to see what happens in this area here. This is quite a key level for me, a key area.
And the momentum, you measure that by the direction or the slope of your EMA, correct?
Yeah, exactly. The direction of so you've got a slow, the oscillator is basically just one slow EMA, and you've got one faster EMA. And so what I'm just looking for is mainly on trades like this, I'll be looking for divergences. So if we say now that the EMA is starting to come over into, you can call it the overbought area, it's looking like it's going to turn right where an area where we've already had most of the momentum. Just 2 seconds.
Okay, so I want to cover just quickly this this comment right here. So I have almost blown my account. It's due to overtrading and not sticking to my plan. And so I think, overtrading obviously a huge problem. But I think maybe we'll take a couple of minutes to talk about this, and Victor, you might jump in here and talk about overtrading as well. So do you feel like you have problems with overtrading? And if you do you have anything you do to make sure that you're not overtrading?
Yes. I wouldn't say I have a problem, but I know it's a weakness. I know the way I am, I am a competitive, and I know that if I don't keep that in check, that it will hamper me. It will damage it will have a negative impact on my P&L. And what it basically is that I need clear, objective rules specifying every step I take. Otherwise, I know that I will have problems with overtrading. So it's something real that if I do my plan correctly, I don't have any issues with it. But it's always lingering there that if I don't watch out, I can fall back into it. And it's something that it's not easy to because you have to be your own manager and correct yourself. It's not always that easy, but there are ways to deal with it. And one of the ways that I do is exactly what I said. I need to have a rule-based system. I cannot be trading too discretionary, because if I get to choose too many things, I run the risk of overtrading, right? I will
Yeah.
if I allow myself that freedom to say, okay, if it takes me out, I will be able to, maybe I will get in again, and maybe on the second time. That those maybe should not be in my trading plan. It is either yes or no based on the data, and that is how I have solved that issue. Otherwise, profitability is very, very difficult if you're overtrading.
Sorry about that. We had a
You-
crash literally outside the window, and it made the biggest boom ever, and a car just caught fire. So
Wow.
that's why, yeah, you're literally just
Wow.
right outside. Yeah. I hope there's ambulances and all kinds of stuff outside. But yeah,
Oh,
going
wow,
off what
that's
you
crazy.
what
That's
you said,
crazy.
Victor, I am also, if I just work off discretion alone, then I'm just going to end up getting absolutely smashed in the market. But having a systematic approach with discretion, for me, is the best thing. I'm never too good with just having just a mechanical way of trading, just because I'm a person that I don't like rules. In general, I like having flexibility, and that's why I think, for me personally, having discretion with the basic overall system of what I'm looking for is the best fit. But everybody's got to figure out what is good for them. Some people just having a mechanical system, with mechanical stops, mechanical take profits, many different things. It's also good. But if you're going to do that, you might as well just get an EA and just code it and not bother getting in front of the charts.
Yes,
my opinion.
the thing is, I know that there are moments and places where discretion will increase my P&L. But the thing is to know that which one it is, and that only comes with time and experience. And from my data, I know that, okay, if this happens, then when I see that discretion is helping me, I can incorporate it in my rule-based system. Then it's no longer discretion; it's part of my rules. But I do allow myself for some discretion, but I know that it's a two-edged sword. If I apply too much of it, it will no longer increase my profit, but actually decrease it. So it's a fine balance that is it's a dynamic process that takes some time to get optimized. The best thing is to have, I think for most people, it's the safest way to go, to have a rule-based system, right, based on data, and then later on you can check or you can notice when are you allowed to deviate from it. And of course you have to do your testing before you actually start deviating in those specific moments away from your system, which is clearly rule-based. But it shouldn't be the first thing to be doing.
I think what we're talking about here is two different things, because now you're talking about discretionary trading versus systematic trading, on the subject of overtrading. I'm more interested in understanding why we overtrade. And I think people can overtrade for the same reason while having two different systems. So you can have one discretionary trader overtrades for the same reason as the systematic trader is overtrading. And Victor, you said something important here. You want to be your own manager, okay? And then that manager is going to be inside your head, and it's going to be telling you that you're about to make a mistake. And stop you from making that mistake, and that mistake is taking the next trade, the trade that you shouldn't be taking, right? So you need to have rules, and you need to be that manager to make sure that you're following the rules. Now, for me, I'm overtrading because of impulsiveness. Okay, I'm impulsive, right? So I'm thinking, is there any other reasons other than being impulsive? Is there any other reasons for overtrading? So I'm thinking maybe there's someone who's just in the market, they're just taking trades, they're not really impulsive, they're just following the edge, but then all of a sudden they'll find themselves in too many positions without really realizing that until it's too late. But for me, it's simple to see how being impulsive leads to overtrading. But would you guys say that there's another reason, more reasons for overtrading?
Yes, I would say yes. I have thought about this because, to me, in my case, what happens is there is a trigger, and I go on tilt. I used to go on tilt a lot. No, that doesn't happen as much anymore, but it's something that I need to keep in check. And instead, not only because of impulsiveness, which may be something, a characteristic of your personality, but there are how you handle losses or setbacks in the market can be if you can't handle them well, can be a trigger to you. Revenge trading, not being able to accept your losses and realize, you have to move on. This setup did not work. It's fine. It's just one for, the books, for the statistics. You don't have to win them all, right? That's one of those things I think can cause overtrading. The other one is, and maybe it's the same, it's expressing it in different terms, but one of the things that I notice is that I need to be calm. When I lose my calmness, and that can be for different reasons, I am more at risk on going on tilt. So it is, to me, it is keeping my calm. And how do I do that? And I need to identify things that can throw me out of my not comfort zone, but out of my take away that calmness, where I stop thinking things and I start to handle perhaps impulsiveness, as you say, but you could say it's revenge. You could say it's you can. I think there's a lot of overlap in those terms or in those scenarios.
So what we talk about here is there's many different reasons to overtrade, and your specific reason to overtrade, it might be maybe not unique, but you do have unique characteristics in your personality, and those unique characteristics is going to create a unique reason for you to overtrade. So what I did in my trading plan, I tried to create a psychological profile with my weaknesses and my strength, and I looked at that, and I quickly realized that it's my impulsiveness that leads to overtrading. And so you need to find your own reason, and like Victor said, you need to find your own trigger that gates that makes you go on tilt. And for me, the trigger is usually some type of stress, whatever type of stress. If I'm not calm, like Victor said, you want to be calm, and when I'm not calm and I feel stress, I become much more susceptible. What's that word?
Susceptible.
Susceptible, yeah. I become much more whatever that word is. Yeah, I become that word to
vulnerable.
Vulnerable to overtrade. So find your reason, right, and find that trigger. If you don't know what the trigger is, you can't help yourself.
Yeah, I feel like I go on tilt if I make silly trades. If I make silly trades, a trade outside of what I should be doing, Then I tried to revenge trade, and then that revenge trade ends up being me going on tilt. And it all comes from a lack of discipline of just taking trades where they're kind of mediocre. And those mediocre trades end up then putting me through a feedback loop of everything else. But
I think those triggers can be different things to as you said, different people, and you have to find that out what it is exactly. But it can be many things. Anything that puts you under pressure, that takes away your calmness and your ability to think straight and clear, and anything that gives you that impulse of wanting to make that trade, because it can be, for example, if the trade took too long to get to fruition, it can be something like impatience. You watched it go up and down, and after a couple of hours you can't handle that anymore because your emotion were going up and down and you're exhausted emotionally, and you get impatient, and you close it perhaps, and then you open it again, things like that. But it could also be a conflict, for example, outside of trading, right? Something with your significant other or some family issues. It can be the need to make money. If you're a desperate trader, or you're a trader that needs money, of course we all have necessities, but I mean in dire need of money, and not able to wait for your for your trading system to actually produce as it should, that can also be an issue, right? You can't force the process, and I've seen that in the past when I have like a project that needs a certain budget that I am still working towards, right? It can be something big or small, it doesn't matter. But if you have that in front of you, by focusing too much on it, you are creating pressure onto yourself, and that may cause you, that can be a trigger. And that shouldn't be the case, because that's the same thing as when we focus on the P&L, right? On the screen, we focus on the P&L isn't the correct thing to do. You need to be focusing on the process. But on the bigger schemes of things as well, if you're looking at your monthly P&L and you say, well, I want to get double that, and by saying that, you're already looking and approaching it the wrong way, by putting that extra pressure on you, instead of you're moving away from that process-oriented approach, which we should always keep and maintain. So there can be different triggers, not only how you are as impulsiveness, but also, outside of trading factors that if you don't watch out will affect you.
Yeah, no, and that's exactly, and it just goes to show how important mindset is. Like I talked about so many times before, it's people think trading is all about analysis, while it's so much more about the way you're thinking. And like you said, things outside trading has the ability to affect your trading much more than your actual analysis. It's easy to look at something like Bitcoin and say, all right, so Bitcoin bounced at support, it's now heading towards resistance, but it's probably gonna see a rejection here at resistance, right? And you make a plan, I want to enter based on this, and set your stops and TP and everything, and but then you actually have to follow that, and so when you're done with the analysis, you start thinking about other things, like, what if I can make a little bit more money? I can buy this thing that I wanted to buy, or whatever. Yeah, I think very important to focus on your mental game. And it's easy to say, but I really
I want to say something because it can also be something not so obvious. For example, if you're worried about the health of a loved one, that also can already be something that puts you on tail or puts you vulnerable to go on tail because you're not balanced mentally to be able to trade. That's why it's important to have those meditation or reflection moments. It doesn't always have to be something monetarily or related directly to trading. It can be something a little less obvious as well.
I think my stop loss is going to get taken on this. I'm probably going to take it off.
All right, let's pull up my screen so that we don't have to look at your stop loss getting hit.
No, I closed out.
Okay.
Closed out.
Let's talk a little bit about Bitcoin because I know that M76BB is wants us to take a look at Bitcoin. So I've talked about this for a while here. We've the EMA that you see on the screen here is the 20 EMA and the weekly for Bitcoin, and so we did close the weekly candle below the 20 EMA here. That was the close to 2 weekly candles, not the last week, but the weekly candle before that. As you can see, that was the first time that happened since actually, starting the proper bull run here. Now that is quite a bearish signal for Bitcoin. But what happened was we actually had a drop, a quite significant drop right here from the top to the low is a about 28% drop, which is actually quite normal in a bull market for Bitcoin. So it's not like the bull market is completely over. And I did start layering in some, buying positions in this area right here. I did not get filled on all of them, obviously, but at least three. And then the rest of this right here, I started accumulating when, as you can see, Bitcoin had this around the bottom right here at the daily range lows. Now this obviously confirms to me that it bounced off the lows. It's a very, very bullish reaction right here, creating a nice support here and then pushing higher. And now what we're seeing on the long term here is quite good. So I haven't added to my long-term Bitcoin and Ethereum position. Last time I did that was, when we traded here. So you can see that buying a substantial position here has increased I believe my average entry now for Bitcoin is up around this area right here, where I also have the stop loss, right? So if price goes below 40K, I'm looking to get out at break even of this position. I have taken some profits, not a lot, but if this is validated, I will at least get out at break even on my overall long-term position for Bitcoin and Ethereum. And my target, as you can see, is my long-term target is going to be at the 160K region right here, but I will start selling at 100K. So at 100K, I will start, taking a substantial amount of profits, but I'll let some of the position run up to 160K. This is also dependent on the MVRVC score, and you can see the MVRVC score right here. The sell zone is the area between 5 and 6. So if price is reaching this level, when price hits 100K, I'll sell everything, right? But if price is hovering around this area, when it hit 100, I'll wait for the MVRVC score to hit 5 or start trading between 5 and 6. So that's going to be when I sell the whole position. And we're now seeing as well that Bitcoin on the weekly is trading once again above the weekly 20 EMA. So this would be a sort of a fake out below the 20 EMA. And if you add the 50% fib as well, you'll see that the bounce on the weekly happened very nicely on the 50% fib right here. So to me, it still feels bullish. The local structure, however, if you look at this right here, you get lower lows and lower highs forming. So you might see something like this. And if we do close another weekly candle below the 20 EMA, that might actually be a very, very bearish signal for Bitcoin, because usually when that happens means we are most likely at the end of the bull market. Now, if you look at 2017, the top in 2017 that kind of put Bitcoin on the map, right? The impulse move to the upside was so strong that the weekly 20 EMA really had, you know, it didn't come all the way up here. But when we closed the weekly candle below it, that was truly the start of the bear market. And then when we closed the candle above the 20 EMA, we had a massive move to the upside, closed below, bear market, and then above, close above, massive rally to the upside. The only time when that was not true was when we closed the weekly candle below it in 2021, because we then had that second leg, right? But then we closed below, started a bear market, closed above, rally, and then here closed above, and we had a massive rally. So the 20 EMA on the weekly for Bitcoin is a very good indication of where of the overall trend. And if we can reclaim that, that would be very, very bullish. So actually, Alex, I know you're probably thinking about Sol. I want to talk a little bit about Sol. So the same thing is kind of true for Sol here. If you add a support level here, you'll see that we are now once again quite bullish. Yeah, we came down, we bounced that support, and even though the local structure is we got lower highs, it definitely looks like it's regaining some strength here after hitting support. So these
what about
here,
FTM? Check FTM afterwards, because that was my biggest bag. That I remember you we were talking. I sold in the area that it was just a bit under the area that it is now, just because I didn't want to ride it down to back to break even. But for me to get, I don't know. It's difficult. It's a difficult one.
FTM is not looking.
It's still in its uptrend.
I would say this is. I would say this is.
It's tough, isn't it? It's a tough one.
Yeah, it is. I'd say it's neutral, but you don't have to take it into consideration for what it is. It's an altcoin, and you look at the environment, which is you compare to other altcoins, the overall sentiment in crypto. So you look at Bitcoin bouncing at support, you look at Sol looking rather strong. You can look at Ethereum as well. Even though I'm looking for short on Ethereum, it's on the higher time frames. It's still, you know, bounced that support here.
It's horrible though.
Yeah, I think it looks good though, because
everybody shouting alt season soon is probably one of the reasons why I actually did close out of all my crypto positions. It was just like everybody
and
coming down. Everybody was saying hold alt season. I'm the biggest crypto person, you know. I'm, you know, hodl till I die, you know. But there comes to a certain point where it's just like, I don't see the economy getting any better.
Yeah.
As soon as if they cut interest rates, which everybody's waiting for them to cut interest rates. Normally, if they're cutting interest rates, thinking about it, it's normally because the economy is in such a bad way that they have to start trying to pump liquidity and get people to start, you know, growing the economy. So who's going to put money into crypto? That's what I don't know. Maybe I'm just.
I think you're right. And I think you're quite right. But also, alt season is a term that applied pre-ETF. Okay, the crypto market is not the same market we had in 2017. 2017 we had altcoin season. Okay, that is true altcoin season. You can you can take a dart and just pick whatever altcoin and it would just fly 400% the next day. That's altcoin season. We haven't seen altcoin seasons in several years in the crypto space. what we're gonna get is small altcoin windows, but we're never gonna get an altcoin season. So if you guys are betting an altcoin season, that's you're playing a losing
don't
game.
think I really don't think I agree with you. Everything. I think the market has changed a little bit. I think regulation in certain places got a lot harder. I was shocked how difficult it was for me to actually get money from my bank account onto a crypto exchange these days. Where I remember back in the day, it was just super easy. It was actually a lot harder for me to do that now. Binance and Bybit and all of those things it was difficult, especially if you're from the UK. So
I think it's also everyone's screaming all, like you looked at that and like everyone's screaming altcoin season, and you looked at that and you said maybe that feels like a top. Now that there are certain very obvious top signals in crypto, and one thing is when celebrities start to promote their own altcoin, or when they post on Twitter and they say, what altcoins am I buying next? And then the next post is, oh, I launched my own altcoin because I can't find anything good. That's a top signal. A couple of weeks ago, we, in the bear market, people like Andrew Tate are saying things like, "Oh, crypto sucks," and then in the bull market, he launches his own products, right? And then every celebrity is jumping on the bandwagon and launching their own crypto product, their own altcoins, and they're pumping it and they're dumping it on their followers. That's a very obvious top signal. And we had probably 10 big celebrities doing that in the span of a couple of weeks before this big drop right here. So when you see things like that, it's time to take profit. It's always the same thing. When Bitcoin is at the bottom, you'll see newspaper writing about how Bitcoin is dead. That's when you're supposed to be buying. When everyone's screaming buy Bitcoin, when every celebrity is just launching their own crypto token, that's when you're supposed to be selling. Okay. And I'm afraid that we did hit a peak because of that, it was slowly but surely going mainstream for all the wrong reasons, right? And we had to kind of reset. We had to liquidate a whole bunch of people. We saw that this drop liquidated a historic number of people. The amount of money that was lost in this drop was bigger than the FTX crash, which is just insane, right? And that is mostly because of celebrities being very greedy and making money on their followers. And crypto is still a very new, it's still quite relatively unregulated, and it's
still an immature market. It's still not mature like Forex and futures and stuff like that. But at the end of the day, I do think there is still potential. We've probably still got room to go up. Look, if Bitcoin goes to 100, the majority of things are going to go up as well. Okay. Yeah. But before it gets to that, the reasons why I closed on my positions, before it can get to that, it can still come lower. And if Bitcoin comes lower, then you're looking at your altcoins. I closed out of my positions, probably lost around 60% of my unrealized gains. That is a lot. Yeah. So my mistake in this cycle was not having any exposure to Bitcoin, and it was fully altcoins, because altcoins really underperformed Bitcoin in this cycle, whereas altcoins in the last cycle actually outperformed Bitcoin. So when we're saying you got to be diverse and stuff like that, having exposure to Bitcoin, which is like the go-to, then definitely do it. But there are some altcoins, projects and stuff, if there's a lot of hype to it and they've got some really good fundamentals, then definitely go to it. I've still got half of my Sol position still. I still haven't closed that. The reason I didn't close that is because the structure on Sol still fully hasn't broken, whereas on other altcoins they did break, and I was a little bit too slow in actually reacting to the break. But better being slow than not closing, and then all of the profits that I made just went to zero, so
yeah. And I think also, like you said, your mistake was that you're not holding enough Bitcoin, and that's the reason why I only have Bitcoin. I have mostly Bitcoin and just a little bit, Ethereum, and that's the reason, because I've been through a lot of bull markets and bear markets for crypto, and if it's one thing I've seen is that the gains usually comes from Bitcoin. Like in crypto, the safest asset is Bitcoin, and I've seen that using low leverage or no leverage, max two times leverage on Bitcoin is will help you not get liquidated on the big moves. Most of my losses in the altcoin market or in crypto has been in altcoins, because I'm using 20 or 30 times leverage on a position, and then it comes from Bitcoin, and there's just a massive wicks, takes me out, and then it continues up. So leverage is also very, very dangerous in crypto. We get a question from Alex here. He's asking you, Victor, how's your EU trade is doing?
Took my name.
It's well, the entry, the original trade is of course price has come back to is right now it's, let me see the actual chart. It is in drawdown. So but that is okay. I don't that's not an issue for me. What I do have is I have multiple signals. I just had 2 losses that this order block, not only this order block, but another on the 2-minute as well, they triggered and it took me out. But I just had after those 2 losses, I had 2 more signals and I took them. So I'm in multiple trades. These are with stops much tighter, things in the range of let me check. I think they are in the range of, one is 1.9 pips stop loss, and the other one is 2 point something. So something in around this area. When you get to the 1 minute, I think it's a little bit higher than that. So I'm getting entry signals in here, and that's okay. It's okay if I get stopped out. I don't. That's part of the process. Not all of them, actually, the majority of my signals will not go to TP. So that's nothing to worry about. As long as I follow the process and I take the signals as they come. And a couple of them, majority of them will turn out to be stop losses, but it is those bigger ones, like the ones that I just had. If it still goes to my FTA, which is that, I'm getting 9 out of them. So that amply, and that's that's enough to cover those 2 losses. Even if it becomes 4, for each one I win 9 if it goes to TP, of course. And that's only with the first FTA. If it doesn't always go to the next one. But at times, if it were to go to the next time, that would be 19. That doesn't happen very often. And considering the time of the day, it's probably not going to go to that low, not today anymore. So it's going to be hard for me to hold that for an overnight. I need to see price action for me to, this is the reaction that I want to see on the very small time frames, right? As it comes into these order blocks, how does it behave? Does it reject those entry order blocks or not, right? Does it form, as the market is fractal, does it form new quasis, double tops? I don't trade double tops, but you could trade them, or any other kind of price action that indicates that it's rejecting something when it gets to that order block. And this is that was one of my entries right there. So, and this is, we'll have to see, right? I try not to get too excited about any given trade, because as you said, Jonathan, you have no control, and we do not know if the next trade will be a winner or not. That's not part of our job, right? It is in the bigger number of trades that you will see your edge being expressed, but not in the next one. The next one, you have no idea. It's the sequence when the winners and the losers will come. The sequence is completely random. You rightfully said that, Jonathan, and you need to embrace that as a trader. You do not have control of your next trade. You only have control of your process. So
it's very difficult. I mean, it's because it's such a almost outlandish statement to say that your next trade has a completely random, like the outcome is completely random, because it's one thing to say that, but to really understand it and trade from that mindset is something completely different. Because when I say your next trade has a completely random outcome, a lot of people probably think that, well, it doesn't, because it's my edge, and I know that my edge has a 60% win rate, so the next trade has a 60% win rate. But that's not how it works. So it's very difficult to actually take that in and accept that. It's easy to hear us talk about it. It's easy for me to say it. It's easy for me to say, all right, just forget about the outcome of the next trade. Focus on the next 100 trades. Look at the next 100 trades, and then you can make an assumption of your win rate and all of that in your edge. But even me saying that, I think like, yeah, but it's not logical. Okay, and that's the problem. To be a consistently profitable trader, you need to get ready to be comfortable thinking and accepting things that might not feel logical to you.
Well, it's counterintuitive, right? Because what we are basically saying is, if you want to gain control of your trading results, you need to let go of controlling your next trade. Already, that's counterintuitive. You're letting loose, right? You're accepting you don't have control to actually gain control. It doesn't, right? It sounds counterintuitive, but that's how it is.
Yeah.
You have to let go of the idea that you can control or do anything about the outcome of the next couple of trades. You can't.
Have you guys seen that exercise that they do in the Navy SEALs when they drop them into a swimming pool, and they're tied with their hands behind their back, and probably legs are tied as well, and they're supposed to exhale. They go underwater and they exhale to pull them down to the bottom, and then they push up with their leg and they take in new air above surface, and then they get below and they exhale. And if you compare that to trading, I'm not saying that
that's what it feels like when you're in drawdown.
Yeah, I'm not going to compare myself to the Navy SEALs or anything, but it's a very good illustration of you have to let go to survive, right? You have to really, the more you try, if you're in that pool and you're really trying hard to survive, you're doing everything to get above surface, you're gonna die. Okay, what you have to do is you have to let go, you have to relax, you have to exhale, be calm, and that will make you survive. So the same thing goes for trading. The more you try, the less money you're gonna make. You're going to become profitable when you stop trying to become profitable, and that's weird. It's something that we haven't really learned about in school. We are not brought up in this world to thinking probabilities. We are creatures that think, if I do this, then that will be the effect. Not like, if I do this, then whatever can happen. It's a weird way of thinking, but to be profitable in trading, you have to let go of the static mindset, and you have to start looking at the world in terms of probabilities. And I know, Alex, you said something about that. Like when you're out walking, you're like, what's the probability of this happening? What's the probability of that happening? And that's a good start,
Yeah.
And
what's the probability? I do it all the time when I'm just like going in life. It's just so funny, some of the things that I do it in my head.
Yeah.
I put it in other words, the more you need to make profit, the less likely you are to get that profit, because you're probably going to be working, forcing the process, trying to get the money, but it's most likely that's not going to work because you're not following the process. You're just pressuring, you're forcing the process. That's not how it works. So you, in trading, you should not be at all be desperate, of course, but you should not be in need of money. It sounds weird, but that's how my experience. If you're in need of money, you're probably not going to be in a right mindset.
Yeah. So we're getting some questions on if we can look at the DJI, so the Dow Jones Index, and obviously we're not looking at that. That's US, I believe that's US 30. We're not looking at that much because I'm not trading it, and I know none of you are trading it as well. But I can take a look at it, and it's basically going to be the same as any other type of analysis that I ever do. I add some horizontals, I look for breaks, I look for retests, and what we can see right now is we can actually see that we do have a pretty nice breakout right here. We get a breakout happening right now based on the daily. So that's first we have so we get a gap up on the daily. Seems like that's okay. No gap on the lower time frame still, because that seems like it got filled, but it's a small gap right there, so it's not really. It's filled. No, it's not filled, is it? No, it's not filled. Anyway, we got a breakout here on the daily, and going into the 4 hour. That's a bit difficult, isn't it? Yeah, that bearish candle kind of destroys it for me. Looking at the. Yeah, actually, this is quite difficult. I would wait for this daily candle to close to make sure it's not a fake out. If I'm looking to go long, which I would be doing in this case because it's extremely bullish, I would probably wait for this candle to close and then start trading this on Tuesday, Wednesday. We also have news tomorrow, right? Or that's today. So we got Fed Pulse speaking tonight. I would wait till tomorrow, see how that speech is affecting price, and then tomorrow, of course, we have got retail sales, but I would probably be looking to go long around this breakout area, but I would be doing so tomorrow. Best case scenario is like we get something like this, to be able to trade that break and retest. But that's about it for US 30. Let's look at S&P 500. Oof, look at this. This is crazy. It's been a while since.
Are you still in that Euro position?
Yes, I am.
Nice. I think you're good, man. I think it's gonna come down. It's
that is actually a trade. Yeah, that's actually a trade.
That's nice.
That may have been the entry. I don't know yet, but
I might get into an extra entry right now just because that does look good.
Same. So it's one of the things I know. I don't want to switch the hijack the subject, Jonathan, because I think you were talking about your S&P.
No, go ahead.
Expectations, but regarding what we talked earlier, one of the things that helps me let go of the results of the next trade is having data. When you don't have data, it seems like to me I'm gonna be in I'm doing something that I don't know what will happen. I'm losing control. That doesn't make sense for me to let go. But when I have data that tells me that if I take so many trades, I will end up having this many R's, going to be up this many R. That is what I hold on to mentally. I'm hold on to my data that backs up the process. So as long as I have my data, I can just focus on the data and the process, because I know if I follow the process, I should have something similar that what I measured in the past in my testing. And that's what I focus on, not on the present result, but on the testing results. And the testing results can only manifest themselves if you follow the process. That's why it's important to follow the process. Otherwise, you cannot expect to get the same results you got in your testing, right? It only applies if you follow your process to the T. So that's how I manage to deal with over trading as well.
Yeah, no, I think you're absolutely right. When you look at the numbers and you start really focusing on the numbers, that's when you can say that you're focusing on the process and not the actual the actual results.
I'm actually gonna take that back. I'm actually gonna go long, just by the way that it's actually looking. To be honest, I could be totally wrong. I could be absolutely making a dog's dinner out of this, but it's
to be fair, that the 15
really,
minutes should have. To be fair, the 15 minutes should have. The 15 minutes should have closed as an engulfing.
Yeah.
Oh, 5 o'clock. Hold on a second. 5 o'clock. We got Powell's speech.
Yeah.
I'm not surprised why it's not doing anything. God, Alex, give him back his profits. The way that he does all the time.
Look, it's I can see the long you're taking, even though I'm short right now. In this, on the 5 minute, I can see the transition to the downside, and it's reacting to the right structures. However, at a certain moment, it needs to start showing that on the higher time frames as well, on the 10 minutes, on the 15 minutes, on the 30 minutes, and it had an opportunity to close as an engulfing 3 minutes ago, and it didn't do that, right? That doesn't mean anything. Doesn't mean I'm going to close my trade in my case, but I was expecting some kind of confirmation there that it closes and starts forming bearish order blocks on the 15 as well, and it's not doing that yet, and it needs to do it if it's going to go to my TP. So that's a sign that could be, says something about the probabilities of this trade going to stop loss or not. And if you look at it on the, go ahead.
No, go ahead. I think you're. People probably want to know your thoughts on that.
Well, if you look at the 30 minutes, it does not look bearish. I don't see that transition. If you take off everything, it needs to start. There wasn't one order block here, but it should respect it, and it didn't. It broke it, right? That's one sign that something might not be completely right with my setup, right? Because it goes in sequence. Right? On the higher time frames, it starts breaking down, let's say on the H4, and you will see that, of course, if it's on the H4, you will see that on the H2 as well. And you can wait for the lower time frames, the minutes, to break down as well. And once it breaks down and reverses, it needs to go the other way around, right? So you do the top-down analysis, but once you are in the trade should start to confirm you going up again. So not top down but bottom up. So it should be showing reversal patterns on the 5, the 10, the 15, 20, 30, etc. for it to be working, because that's the fractal nature of the market. It's not going to
Yeah.
go to my TP if it doesn't transition from bearish order flow on those time frames as well, the 15, the 20, etc. As I said, right? By the time the 1 hour switches, it's probably already going way closer to my TP. So that's going to be too late. But the confirmation might come from the 15 minutes, right? It should somehow here on the 20, 15, 30 minute, it should start making, constructing or forming those bearish structures. There's no other way around it. It needs to, it can go down without bearish order flow. The sellers need to take control, and that's the creation of order blocks is the expression on the charts of the sellers taking control. And there's no other way to do it. It needs to do that in some time frame higher than my entry time frame.
Yeah, guys, if you don't have anything more that you want to share, I think you want to monitor EU rest of the live stream, or anything else you want to cover here today before we start wrapping this up. And by the way, guys, if you're watching this live or you're watching the replay, let us know in the comments if you do have any specific questions or anything that you would like us to cover. We're more than happy to take a specific question and then turn that into a presentation, or break it down and just answer whatever you have in mind. And also in the Discord server, for those of you who are in there, we do have a section where you can ask us questions directly for us to bring up here on the live as well. Look at that EU trade. It's
yeah, the way that I was.
You were gonna say something about the
we're finishing
S&P?
it now. Are we finishing or are we carrying on? I can't remember. What did you just say?
if you want to look at EU, then
No,
because I don't have anything to watch.
Talk about why I was going to go long. That's all, and just or why I am long is just because we've had all of this push down. We found consolidated around the weekly, and then we've pushed up. Now, for me, that's just looking for the break and the retest. And just because it's hit here, it's just hit a bunch of orders. It's consolidating on these orders, and it's not actually breaking down. It's found support on that little order block that Victor would call right there, and it's found support on the 21 EMA, and it's hit a fib, and it's holding as support. Now, for this to complete as a break and retest, we would look for it to take out this high. So that is where I would say, if this was the break and retest continuation kind of trade that we're looking at, which it does look like that is, then that would be the target. We have seen quite a nice bit of momentum, and it has made a higher high on the chart, and it's made a higher high also on the oscillators as well. So that's why I decided not to go short, but to go long. But there is another trade that you could have done here, which is probably a better trade, and that's not to do anything and just watch. So I've got to get better at doing those types of trades, because those types of trades would probably make me the most money. But
it's true. Not trading is a lot of times most profitable.
Yeah, cash is also a position.
Yeah,
cash is
exactly.
also a position. We got to change that name there, that saying on the intro as soon as possible. Cash is also a position.
All right, guys, I think that wraps
it
up.
That's it, man.
Cash is also a position. Tomorrow, what do we have tomorrow? I cannot
basic EMA.
remember.
We're talking about the basic strategies, aren't we? Let's have a look.
I think that is tomorrow, yeah. Or maybe that was on Wednesday. Let's take a look. What do we have?
Gold trading tomorrow. We're going to be doing some gold trading live.
Right. So we're going to talk about gold. I've been doing some research. I've been, getting into gold. So tomorrow I'll I'll see if I can be trading the lower time frames on gold. So that's going to be interesting. We do have we do have retail sales as well during our live stream tomorrow. So that's going to be interesting. See how that affects gold as well. But yeah, I'll see if we can get in some trades on the low time frames on gold while talking about the differences between trading gold and trading the major forex pairs as well. All right, that's it, guys. See you all tomorrow. Take care.
Bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.